Good morning and welcome to Property Wanted Ltd, and this is a short video on using the Section 24 tax bomb calculator, and we'll get straight into it. My name's Gary. I'm the owner of Property Wanted Ltd amongst other businesses, and now we're going to let you into a few tax secrets. So I'm going to switch on our browser and I'm going to get rid of the bomb disposal squad just for now, and you're just stuck with my face for a minute. So what's this all about? Right, so we'll just start here. So you should have now downloaded, or you'll have access to our website where you can see this estimator, and it's going to first work out to see if you've got a problem, and if you've got a tax bomb, does it need diffusing? And to find it out, you can download it here by just aiming your smartphone camera at this QR box, and you'll be able to download it to your phone or an iPad or some sort of smart device. So first of all, what is Section 24? Well, Section 24 was invented by George Osborne, who was then Chancellor of the Exchequer, and David Cameron in 2015, who's the British Prime Minister. And basically it removes the ability to offset any of your financial costs associated with finance and loans from banks, etc., against any rent received on a residential property in the UK. Now, different countries within the UK may have slightly different rules, so I'm basically talking about England and Wales here. But you need to check with your accountant or a qualified individual. And just to emphasise, I am not a qualified individual, but I am someone who's been affected by this tax. So let me speak of my experiences of what to watch for. So you can have a read of this down here. Basically it's saying that it doesn't matter what you do, you can't get out of the tax unless you become a limited company or an LLP and things like that. But if you do that, you'll get hit with capital gains tax if your property's a bit old, and also when you do a transfer, you'll probably have to pay stamp duty. Well, we don't want that, do we? But let's first of all see if you've actually got a problem. So moving on, so what we're going to do is just re-emphasize to any politicians watching out there that the landlords don't pay for anything, but the tenants do. Okay, I don't pay for anything in my business, the tenants pay for the lot. So if anything that you pile onto me goes on to them. Now the consequences of Section 24 at the moment are pretty horrendous, in that landlords are just leaving in droves from the industry. The properties are being swallowed up by hedge funds and corporate banks because they won't have to pay this tax, but private individuals do. But I won't go into the politics of it. Let's see if you've actually got a problem. So to do that, we just go down here to this next tab and we click on that, and it'll come up with a series of questions, and it just gives you a broad outline of Section 24 tax bomb estimator. Remember to seek a qualified professional for confirmation, so this is for general information purposes only. First thing to know, it doesn't matter if your property makes a loss. If you use a letting agent, they can't stop the tax. It doesn't apply to limited companies, as I mentioned earlier. Currently, there's no property related financial charges that can be used to offset this tax. Wow. Okay, including bridging loans, setup fees, etc. Raising rents may simply increase your taxable income, and any interest rate rises will be added to your income. Now obviously ignorance is bliss, but now you've got this estimator, you're not going to be ignorant anymore. And you don't know what you don't know, but you soon will. But don't panic, there is a solution. More about that later. Okay, so to start off, you click this reset button. So if there's any data that was already in there, so I'll give you a demonstration. So I put in that I had 11 buy-to-let properties and it was £5 million. Okay, if I press reset, all of that disappears and you start from scratch. So first of all, how many buy-to-let properties do you have? Now when we say buy-to-let, we mean properties that are rented out to residential tenants. We do not mean furnished holiday lets. Okay, so if you're thinking of your holiday home and you rent it out as a holiday let, don't include it in this total. So we'll keep it simple and we'll say that we've got a landlord and he's got 4 properties. Okay, now you may be different, just put in what your figure is. And we now need to know what is the total value of those properties worth. So I'm just guessing here, but the average price at the moment for properties in the UK is around about 300,000. So 300,000 times by 4 will be 1.2 million pounds. It's 1.2 million, I reckon. Yeah, 1.2 million. Wow, soon mounts up, doesn't it? Next we need to know what the outstanding mortgages are, if you've got any, on that portfolio of 1.2 million. So if you've got buy-to-let mortgages, if you've not got buy-to-let mortgages, you've no need for this particular calculator. But we've got a little surprise for you later, so stick around. But most buy-to-let landlords have a buy-to-let mortgage or some sort of finance on it. So any loans, finance or anything like that, what's outstanding on the portfolio? So let's see, what would you say, 750,000, whatever it is for you, just put it in here. Okay, and that now tells me that you're currently running at 62% loan to value. And you've got an estimated equity or value tied in that portfolio of 450,000. So these calculations are instant, you don't have to press any more buttons, just put the information in and it will automatically calculate it for you. Next one is, from those 4 properties, what is the total monthly rents you're now receiving? So if they're all tickety-boo and everything's running fine, what's the rents on them? Well, the average weekly rents, I did look up somewhere, so if I can just find it on the tab. Here we go. I'll just click on here. How much does it rent? Does it cost to rent? You probably get this information on Zoopla, but I don't know. I'm going to use an average because I don't know your circumstances. So it's saying in London it's £2,257. Wow, is it? Okay, glad I've not got properties there. And let's see, outside London it's 1,126. So we'll call it 4,000. Yeah. So go back to the calculator and we'll put in 4,000. Average gross monthly rent coming in. Next, it will need to know how many months are these properties empty a year. So if you're a student accommodation landlord, chances are you'll have 3 months a year where the properties are empty. In which case you put on here 3 months, okay, and it work out that you've only got a gross yearly rent now of £36,000. But you may be different, you may have them fully occupied all the time. So I'm going to pick, I'll split the difference, call it 2 months. So say you've got a month where it's been advertised with the letting agents in the letting agent's window, and then you've got a month's money that they'll take off you in their charges for setting up the tenancies and so on. So we'll call that 2 months. But if yours is different, just put in the appropriate figure. So now the gross yearly rent on that is £40,000. Okay, but if you look further down here, at the moment you're still in the 20% tax band, which is good. Okay, now we now need to know what the buy-to-let monthly interest is on your mortgages. So work that out, you need to know the monthly interest on your mortgages going out through your bank statements, and then just move this slider until the figure here matches it. So say you're paying 4% at the moment. Well, 4% of 750,000 is 2,531 a month. So you just move the slider to match your current monthly outgoings. So say it's £3,000. Okay, so your interest rate's 4.65%. Now there are landlords out there and they've only got interest rates of say 2%, which is fantastic, and they're on a fixed term deal. However, in the next year to 3 years, these deals are going to come to an end, and at which point you're going to go onto the Bank of England base rate, plus a lot of these contracts are plus 4%. So if the base rate 6%, 6% plus 4 takes you to 10%. So I've just moved that scale to 10. Okay, so you know 10% interest, you've got to find £6,250 per month, okay, in interest. But you've still got worse to come yet. So let's bring this down. Let's assume that you're on a fixed deal of say 2%. Well, I'm going to say that you're on a variable at the moment, but everyone's circumstances are different. So let's say that I'm paying £2,625 a month. That's 4.2%, and over the year that'd be £31,500. Still keeps you in a 20% tax bracket, simply because that interest is now classed as taxable income, and you can't offset that cost against your rent. HMRC are going to assume that all that rent that you're receiving is taxable, which it always was, and they're not going to allow you that interest to come off. What they will give you is a 20% equivalence of an allowance at the end, but I'll cover that in a minute. So you've got your interest there. The next thing is, what is your income from other sources? So imagine that you've got these properties, and you've also got a full-time job. Say you're a cardiologist, okay, you've got a salary of I don't know, 37,000, I'm just guessing here, 37,500. Okay, so now your total taxable income is £69,000, because we've added your salary to the interest that you're paying, and that gives you a total taxable income of £69,000, which now puts you in a tax band of 40%. Congratulations. You're now going to get taxed at 40% on the interest that you're paying to the bank, okay, which is the Section 24 tax. So you've now got an additional tax bill on top of what you're paying out your salary of £12,600 that you weren't expecting. Now the government's going to give you some relief against that, which is they will assume that your tax band is 20%. So if you want that allowance, you click this button here and it takes it off. So it takes off £6,300. So your additional tax is £6,300 that you'll have to fine for the HMRC. So the average Section 24 tax per property is £1,575. So the minimum rent rise per property is £157 a month. But when you raise your rents by that additional £6,300, 40% of that is going to get taxed as well. Now I've not included that in this calculator because I'd be going around in infinity. I just don't have the time. I'm just trying to present here to see if you've got a problem. So if you do have a problem, don't panic. Okay, that's the first thing. There is a solution to it. Now most people think, oh, I'm going to become incorporated and I'm going to put my company or my properties into a limited company or some sort of commercial venture, which is fine. The problem is you will trigger stamp duty unless you get incorporation relief. Now to get incorporation relief, you've got a few hurdles to get over, and I'm not going to cover them on this video, but it isn't easy and it gets expensive with legal costs and so on. There's a much cheaper way around it, we'll cover in our business offer shortly. So you could get hit with that, and also you can get hit with capital gains tax, because if the value of your properties have gone up above what you paid for them, you will owe capital gains tax once you go past your personal allowance. So as it says before, we can fix this. We've got a business offer for you to consider in the next section. So let's get to the next section. Click on business offer. So What's the business offer? Well, I think that you might eliminate your Section 24 tax liability of £6,300 and also apply for 4 tax credits, one for each property, of up to £75,000 on each property, giving you a tax-free allowance of £300,000 courtesy of HMRC. Plus, if you put that tax-free allowance against, it's called sideways relief, and if you put that against your existing salary, you could get your next 8 years gross income tax-free. Sounds attractive? Okay. So what else do you get? Well, let's see if this entices you. You can make more profit. You can get a guaranteed rent. Okay, you can keep ownership of your property, you don't have to sell it. There's no more voids. There's no routine maintenance costs. There's a share of our profit that we make by doing this business, and what I'm going to talk about later. There's no capital gains tax or stamp duty involved. There's less landlordy stuff for you to do. So if you don't do it at the moment, you do it through a letting agent, you won't feel it at all, so there's no pain. Payments to you are automated. Your properties are left in showroom condition. They don't get trashed like they do with some tenants, unfortunately. You get free advertising. It's all okay by HMRC. It's already a proven business, and there's no need to go limited. Sounds good? Great. So the first thing we need to do next is to have a free consultation, because time's running out. So you can't hang about with this one because it takes time to set up. So it's just got this simple form here, and it says, are you the owner? No. So it could be owned by your Aunt Maud. Yeah, but we need to know the owner's name. So hopefully you're going to put yes, and you put in your full name here. So I'll just put in here Gary Dolly. Okay, and your address, house number, so it's number 1. And postcode CH421PH. Now obviously put your own details in here, don't put mine, yeah, because otherwise we won't be able to help you. And you need a valid email address, so I'll put in here info at Property Wanted Ltd. And you have to repeat it just in case you made a mistake. Okay, and now we need a mobile number, not a landline number please, mobile number. The reason for that is once we've received this form, we acknowledge it by sending you a text, and that's why. So we're not going to ring you. We haven't got the time basically, so that's my mobile number. Don't start ringing it because you'll make me change your number. We need permission for you to authorise to send us this information, use it for analysis and store it. If you don't, you won't get any help. You're going to click on here, okay, and it's going to date it, and it's going to say once we receive your inquiry, you will receive an email and an SMS message to confirm, followed by a request for a Zoom consultation. So we do this over the web camera like I'm doing now, inviting you to see an example of how it all works. So all you do is click on this button, and it has a good think. It says the form is being submitted, and it says it's been successful, and then you close that, and that's it. You're all done. And then what will happen is you'll receive a text on your phone as soon as someone picks it up at our end, and then you'll know that we're on it. Now you can print all of this off. You can print this particular page or any tab, or you can print them all. You click on print all, and if you've got an Adobe printer, that's great. You can just print it to a PDF, or if you've not, just print it out on whatever printer you've got. So I've got a Brother laser printer, so I'll just click on print, and then all of that comes out, okay, on paper. So you've got a copy of it, and you get a copy of it anyway on the email. And that is it. That was the instructions. So it's pretty straightforward. Hopefully you've got something from it. If this is of use to you, use it. You can also share it with other people. So if you know any other buy-to-let landlords out there, just scan the QR code and send the link to them, something like that. We can't help everybody. This idea that we've got will suit some landlords and some it won't. If it doesn't, we'll still try to help you, okay, and we'll put you in touch with some professionals who probably can. What else to tell you? That's it really. If we can't help you, I just need to wish you the best of luck. Section 24 is a killer. Don't ignore it. Don't leave it till the last minute, please, because the solution that we've got takes time to set up. Doesn't cost, but it does take time, and time is your enemy with section 24 because the tax year is coming up fast. So we'll see you on the next subject and video. Good day, good evening, bonsoir, bonjour, and all the rest of it. We'll see you soon. Bye now.